Good morning, everyone. This is Rashmi Shah from Simplicity. Uh, I welcome you to join today's presentation webinar on market update. Uh, just before I start, the regular disclosures that this webinar is for only information purposes, and we are not promoting or recommending any investments. And this is for the clients or investors who live in India. Okay. So with that, uh, I start today's webinar. We are living in very interesting times. Of course, times are always interesting. Always something is happening in the world, no matter what. Correct. So, uh, so what's going on right now? So, if you look at the big picture, what's going on right now? The number one thing which is happening everywhere, we are feeling the pinch worldwide, is the rising inflation. So, I just give a classic example. Um, eh, Lemons, correct? Uh, I just came to US 3 weeks back, and in the very first day when I went to a grocery store to buy some lemons, normally in $1 we used to get 20 lemons. With $1, 20 lemons. This time the price of lemon was in $1, two lemons. I said, wow, lemons have become so expensive. So, and trust me, I read in the news that lemons in India also have become expensive. Uh, and in India is the largest producer of lemons in the world. Um, it produces almost one third of lemons in the world, and still there is a shortage. Why? The shortage is because of supply chain disruptions. Worldwide, COVID, the Ukraine war, travel restrictions, every cause supply chain disruptions, and that the demand for products have gone up, and it takes a long time to import or export and ship the product. So everyone is holding it, keeping higher buffer stocks, and that's why the demand has further gone up, and the supply has remained the same. Or in fact, it has gone down because labor is not easily available. So, and on top of that, COVID, we have the Russia and Ukraine crisis, correct? So this has increased the price of oil, which is making supply chain even more expensive than what it was. And the other thing, on top of that, what is happening, the excess liquidity which global governments had pumped in the market, in the economy in year 2020 is getting sucked out again, because as the prices are going up, the government, Federal Reserve in US and most of the governments in worldwide have started increasing the interest rates. So liquidity is getting sucked out, borrowing has become expensive, and food has become very expensive. I'm telling you, food is expensive everywhere in the world. It's not only in India. It's an international trend, and also long-term interest rates um, for housing loans have gone up. So I'll give an example. Um, I have a mortgage in US with an interest rate of 2.75% for 15-year mortgage. That interest rate today, so I for next 15 years, or till the time I repay my loan, the interest rate is only 2.75%. It has gone up to almost 5%. And a 30-year mortgage, which is the most popular, 80% of housing loans in America are taken on 30-year mortgage. That interest rate has almost gone to 6%, which is higher since 2007. In 2007, it was that kind of interest rates. Uh, Now, every 1% increase in interest rate in mortgage loan increases the cost of housing by 10%. What I mean by that, that when the interest rates on a housing loan goes up by 1%, which is housing loan, which is a long term, it increases the cost of servicing that loan by 10% of your housing price. So imagine the impact of that, correct? So inflation is there everywhere. And there is the other thing, in developed world, there is a shortage of labor. A lot of people, baby boomers, have retired and they don't want to go to work back, and uh, immigration has slowed down, and that has caused a lot of labor shortages. And so the wages have gone up, Supply chain costs have gone up, interest rates have gone up. All this is adding to inflation, and that is the number one thing which is happening in the world today. So, and that has caused a lot of turmoil in all the financial markets, whether it's a bond market or stock market or any market, any this, there's a lot of turmoil. So, if while building your investment portfolios, if you don't have a strategy, this kind of corrections can take you 10 years back if you don't have quality in your portfolio and if you don't have a proper strategy. So, like if you're swimming in an ocean or you're going in an ocean, and if you don't have a strategy, you can get drowned. So, I'll give you another example. Um, when oceans are calm, you can go in a boat, correct? In a small boat and have fun. It's okay. But when there's a storm in the ocean, if you go in a boat, you can or yacht, you can get killed. At that time, you need a steamer, a large ship. So currently, you need, though there is a turmoil global in the market, and you need to have a proper strategy. And that's the it's. I'm not saying the markets are bad. Markets are very good. It gives you very good opportunities. This kind of storm comes every 2 years, and it's a healthy sign. Life is not same every day, correct? Even in our life, in our personal life, every day we don't go up, 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 correct? Some days good, some days bad, and that's how mm, we live a life. Same thing happens in the market. uh, so market has entered a short-term correction zone. A short-term correction is a correction when markets correct by 10%. When the markets correct by more than 20%, it's called a bear market. We are not in a bear market today, except for, I would say, Nasdaq. uh, Nasdaq is already in a bear market for last 2 months because it's corrected more than 20%. But most of the other markets like Dow Jones, Nifty, Sensex, their correction is around 10%. Of course, the Russian stock market or Chinese stock market, they're in a bear market. They have corrected more than 30, 40, or Russia is also corrected more than 60. So it depends on, so I'll come to that later. But in Indian, the stock market is under correction zone just now. So what does it mean? What does it mean, correct? So it means if you, the other different trend which I'm seeing currently is gold has started outperforming since December of 2021 to Bitcoins. Many people thought that, Bitcoins is the best hedge against the global volatility and excess liquidity in the market. That's not true. For last 4 months or last 5 months, what we are seeing is gold is a better hedge against inflation than Bitcoin. And most of the youngsters, all in India, I saw somewhere statistics that more than 10 crores people have invested in bitcoins, where in stock market they are less than 7 or 8 crores, correct? The number of investors in bitcoins is larger than number of investors in stock market. Now, all those people must be suffering because bitcoins has come down from 60,000 to 40,000 level, whereas gold has gone up. Gold is very close to all-time high. That's the other interesting trend I'm seeing in the market. So now disruptive innovation in is at very attractive valuation. When I mean by disruptive innovations, companies like Uber, companies like Zomato, companies like Paytm, companies like Zoom, uh, uh, Teledata, correct? All those internet-based companies which are very big disruptors, very big disruptors for last 2 years, and their prices had gone up like anything. They that market has corrected very sharply. It has corrected more than 50-60%. So I'll share that data with you more. So if the correction is very severe in those kind of startup companies and companies which are in disruptive, correct? But whereas that we are seeing in the market. Now let's try to understand the market. So here I'm going to share with you, you know, uh, let's understand the market correction, what it is. So here I have given Nasdaq. I have 6 columns. What is the current as of today? What is the 52-week high? What is and how much distance we are from 52-week high, and what was 52-week low, and how much high we are above 52-week low, and what is the delta between the two, correct? 52-week high and 52-week low differences. So it tells you that, correct? So Nasdaq today is 23% below the 52-week high, which was in the month of Jan. So we have corrected 23%, and it's close to its low. It's only 2% above from 52-week low. So the delta is minus 21. So it's in a bear market. Nasdaq is in a bear market, whereas Nifty is corrected only 8% from 52-week high, and it is 19% up from 52-week low. So Nifty is very strong compared to Nasdaq. So the delta between uh, uh, distance from low and distance from high is almost 11%, which is in green zone. Now you take the stock of Paytm, correct? It has fallen down 68% and gone up 20% from the bottom and 68% from the top. So delta is 48. So it's extremely in bear market. Mm, I wouldn't touch those kind of stocks. Zomato is also at is 45%, correct? You take Zoom. Zoom was darling of investors in the US, correct? Zoom was 407, 52-week high, and today it is $100 from 407. So imagine 75% is lost, and there is only 5% still. So I won't say it's still bottomed out. And it's close to bottom, or something like that. And the delta is 70%. Moderna, Moderna was a darling of the US stock market, healthcare, COVID crisis. That stock went up from $23, it went to 498. In fact, I had also seen if I take 2 years the high, it was about $600. So it's 498 52-week high, and today it's 140. Correct. So see the pain: 72% fall and only 15% from the bottom. But Dollar Tree, so there is this company called Dollar Tree where in America you get everything in $1. You can shop every product there is $1, and that stock. So you can get shampoos, you can get hardware, you can get mobile phone covers, or you can Christmas gifts, or you can get all kinds of toys, everything at kitchen, home appliance, everything for $1. And that stock has done very well. Hmm. It's given 93% delta is the positive. Costco in India, West Side, trend, where uh, West Side is done very well. It is 70% up. So what it shows you that everything has not gone down. The market is rewarding uh, companies which are going with a steady, which has a very good business plan, part to profitability, and they have real assets. Those stocks are doing well, and the stocks where momentum stocks, where all retail public worldwide, India is no exception to that. America, uh, where the retail investors went on websites like Zerodha or Robinhood in America, and they tried to make quick money. Those stocks are doing very bad. In India, if so in Zerodha, the CEO himself has said that 99% retail investors lose money on his counter. So all those investors are losing money, and that's the pain in the market. So that is the main. So does that mean the market is bad? Hmm. Now I'll explain you further. Correct? Why? So this is the. So we need to understand what is the market. There, what is in the everything is so you can't paint a brush that you on CNN news they show Dharavi, so that doesn't mean everybody in India lives in Dharavi. Correct? It's not true. India have people living in palaces also. Correct? In India, so there are all kinds of same thing in stock market. We can't paint the brush and say everything is bad. There are certain pockets which are doing very good, certain pockets which are doing very bad. So we have to identify how we go from there and where you should invest. Correct? So how you build your portfolio. That's what I'm going to talk about today. Uh, so now, uh, in next 12 months, the news which will be in headline, correct? So we all follow WhatsApps, and we share so many sensational news. So if anybody, anytime you open a newspaper, 20 years back, 30 years back, today, always there is a bad news. So that means if there is everywhere bad news, that means the world is unhappy. Well, then not true. 99% people of the world, or 90% people of the world are happy, but that news never gets published. Same thing happens in the stock market, same thing happens in the businesses. Only the bad news gets more prominence than the good news. So in next 12 months, what will be the headlines? Correct? There is a social unrest. small economies like economies like Sri Lanka, Pakistan, Nepal, uh, South American countries or countries in Africa, because of this inflation and oil crisis, many economies will collapse and there'll be a turmoil. So that we'll see the news, but that doesn't mean the world stock market is going to crash. No, that's not true. There'll be certain pockets of economies which there'll be a lot of bad news. Then, because of this social, disruption in supply chain and inflation and rising interest costs, you will see lower GDP guidance in from most of the economies. But that doesn't mean economies are going in recession. So where India's growth was expected to be 10%, we'll get 9% or 8% growth. But there's still going to be growth, correct? And some companies are still going to grow by 30-40%. Businesses are going to grow who adapt and adjust, correct? So that's going to happen. There is going to be more, debt is going to be more expensive, borrowing is going to be more expensive. Again, technology will still dominate. In spite of the sharp correction in technology stocks will rebound. They'll be the first to rebound, correct? Without technology, the world can't progress. So technology, one need to focus on technology, correct? And the irrational stock prices which were there, especially in America, and some of the pockets in India like Paytm, where Paytm was valued at 2,200, and people were queuing up to buy that stock, which has come to now 600. Those kind of stocks won't come back to 2,200, correct? So the valuation will be same. Paytm may go up to 800, but it won't go to 2,200 in near term. So that's going to be happen. Secondly, what we are going to say is investments. Majority of the investors who try to build up trade doing while doing their job, log in the computer or on the phone and trade every day and try to make some side money, they will go through extreme pain. Only so momentum investor is going to get affected very badly, but those who are quality conscious and invest with long-term focus, they're going to do well. So that is going to happen. Those chasing returns will lose. Those focus on quality and process will win. So I'll give you an example here of a rabbit and a tortoise. Correct? Rabbit runs 10 years and there. So though if your personality is like a rabbit, correct? Very momentum focused, very what you call chanchal or very hyperactive, then your lifespan of rabbit is 9 years. It doesn't live that long, and it can come under the bus, under the car, have accidents, and get hurt very badly. Whereas a tortoise, who is very cautious and goes slow, and every step it takes, thinks 10 times and move, they live for 150 years. So, those who have a personality of tortoise type, they will do very well. Hmm? And those who have a personality like a rabbit, correct? Every moment they're checking their portfolio every 30 minutes, trying to shuffle it, trying to outsmart the market, see what's the new, they will suffer. So you need to understand there are two class of investors. Investors who have a personality like a rabbit, and investors who have a personality like a tortoise, long term, correct? So the tortoise lives for 150 years, a rabbit lives for 9 years. So that's the difference. So that will come out very clearly in the market. That's we are going to see. But so I'll go further there, correct? So investing in stock market is still the best asset class of a lifetime. So if someone, if after I die and God asks me what was the best asset class in during your lifetime in the world, I would say equity. Equity, and it's going to remain that way. Stock markets are going to be the best investment class in our lifetime for next 100 years. Why? Because they're extremely liquid. You can liquidate your stock portfolio anytime, correct? And you can get your money in 3 days. The transaction costs are very low. If you want to liquidate your portfolio, the transaction costs are less than 1% or half a percent, correct? Whereas if you want to liquidate your property, sell a property, the transaction cost is 10%. And the liquidity to sell a real estate or any other asset takes time. Real estate takes more than 6 months, correct? Whereas in stock market, the cost is only half a percent, correct? There's a lot of flexibility. In real estate, you need big chunk of money. You need an investor who has a lot of money, a buyer who has a lot of money. But in stock market, you can a person can invest in any kind of company with 1,000 rupees or 500 rupees, you don't require 1 crore. But in real estate, you require 50 lakhs, 1 crore, correct? So flexibility is there. There is a lot of flexibility, which is no other asset class offers that kind of flexibility as the stock market has. And the maintenance cost of maintaining a portfolio is the lowest. So if you buy gold, you have to have physical. You are worried about it, correct? You are worried about it. Stocking, holding, all those costs are there. Real estate, property maintenance, property taxes, repairs, a lot of other costs are there. Whereas that kind of costs are not there. In fact, in stock, you can get dividend, correct? You can get dividend if you don't do anything. So, so asset in our lifetime, stock markets are still the best asset class, even against inflation. So I'll give you another example. So when inflation is there, companies in commodities, stocks in commodity companies, they do the best. Banking stocks do the best. So, like today, if somebody wants to start a new steel manufacturing company, the land is expensive, cost of borrowing is expensive, labor is expensive, and so they'll require more money than Tata Steel. Tata Steel borrowed the money when the interest rates are low. Their property is already depreciated, machinery is already depreciated, so their overheads are low, and so they have an advantage, correct? So all those assets which were built in last 30, 40 years, factories, companies, they will be more valuable, and there'll be more entry barriers to new people, correct? So that having said that, those stocks, the value stocks, they are the best bet against inflation. So that see the other side of the story, correct? Now, uh, what is the root? If you look at the current stock market situation as of today, energy stocks have given the highest return. We know why, because the oil prices went from $40 to $110, correct? Oil in COVID time at one time was quoting negative $20. Uh, so to buy oil, they used to for 3 4 days in March of 2020 and April 2020, you could get $20 a barrel for buying a oil. You didn't have to pay anything because there was no place to stock oil and demand was so low and supply was so high. Today, that's the reverse situation, correct? The supply is low and demand is too high. So oil has gone from practically $0 to $110 in 2 years. So materials, correct? Steel, copper, aluminum, all those things have gone up, and um, telecom, consumer discretionary, all those things, those stocks have given negative returns. So that's the situation as of today. Correct. Now, so what's the future? So at so in the near term, energy and utilities will outperform, but slowly you will see a shift. Banking stocks and technology stocks will rebound. Banking will be the first, and then information technology. Why banking? When interest rates cycle goes up, banking stocks do very well, financial stocks do well because the spread goes up. So I'll give you an example. As interest rates go up, people who have borrowed at a lower interest, they make sure that they pay their interest and installment regularly because they don't want the banks to close that loan. So the default rates goes lower, correct? When they so NPAs are going to be lower. At the same time, the spread between deposit and the new borrowing, correct? New lending is going to be higher. So banks will do very well. Their profitability will increase multiple times as interest rate cycle reverses. And today, no business in the world can do without information technology. So information technology is going to be the driver for growth. Every business has to invest more in IT. So that will continue. So those stocks, though they have fallen down by 60%, they'll rebound. And so that's going to happen, correct? Um, now, if you look at other way, correct, the other trend which is very noticeable. So if you see the P ratio, correct, P ratio. If you take a P ratio of China, Russia. So if a Russian company makes $1 profit, the stock is valued 8.9. So the stock is getting valued at 8.9 times the earnings, whereas the same stock in China is getting valued 16 times. Hmm? The same stock is getting valued in America. If an American company makes $1, it's getting valued at 25. and India also is getting well 25. So you see the stark difference, the valuation. Why? Because India and United States have very good democracies. They have very there is a lot of means peace. They don't see a major wars and there's a lot of checks and balances in the system, and there's a transparency. It's that's not like China or Russia dictatorship. The overnight the government will change the rules and regulations. In China, you know what happened last year. Overnight, government went after Alibaba and all those technology companies, and they felt threatened. So those technology stocks crashed by 70-80% in 1 year. In span of 3 months. So that pain was there because so now people are scared to invest in China because they see okay government will change the like you are playing T20 games and in the middle of the game the umpire changes the rules of the game. That doesn't happen in India and Russia. Sorry, in India and America. In Russia and China, it's possible. In the middle of the game, the government will change the rules. That doesn't happen. In India, it used to happen in the past. Now, the government is giving clear signals that they won't change the rules of the game of doing business in India, and there'll be more transparency in decision making. And that's why India is getting a premium valuation. America is getting premium valuation, and that will continue. That will continue for next 20 years. You see that change, correct? That's a very good positive. India stands out today. Now, other thing which you see, India's perception globally has changed slowly. So if you see today, everyone talks about in India and foreign media. And even if you see that Fortune 500 companies in America, 30% of them have Indian CEOs. The Indian brand, the professionals from India get a very high. I don't work any longer in US, but I got every time I come to US, I get a call from my previous employer and my previous friends. "Oh, do I want to come back in the corporate world?" I said, no, thank you very much. But there's a shortage of management skills, senior management in America, and there's a high demand for professionals from India. And same trend will continue. Now in India, still family-owned companies appoint the next CEO from a family, but that trend will slowly change. So as you see in Tata's, first time a non-Tata person is heading the Tata group. Same kind of stuff will happen in many family-owned, and that's a very good sign. Mm, Very good sign because family-owned companies they get less valuation than professionally run companies, and you will see that change happening. And India has some very good businesses and very good companies. So the perception about India has changed, and we might see in next 20 years even next 5 years and 10 years. Every time the market corrects, you'll see a higher low, and every time market goes up, we'll see a higher 52-week high. So that's the trend we'll see, correct? So now, if you see the Indian neighborhood, correct, all the countries neighboring in India, they're in turmoil. Say Pakistan, Sri Lanka, Nepal, their currencies are the problem. Uh, some of the currency, dollar is at 200 rupees there, and India dollar is still at 76, 77. And there is a big turmoil, correct? Big turmoil in all, including China, Afghanistan, Pakistan, Sri Lanka, Myanmar, correct? Except for Bangladesh, which is doing reasonably well, but most of the other countries are in problem, correct? Russia on the north side, correct? So India stands out. India stands out, and that world is noticing that. Mm, and India will play a very good leadership role. We should not get carried away, but we should behave very maturely. So I see a very good sign. The other thing, in the short term, I have taken a four charts from research reports of other companies. So the second, third, and fourth chart, the source is Morgan Stanley research reports. The first chart I have taken from CNBC. The spread in between, if you see the bull and bear, the four red arrows. So every time that kind of number of advisors who are bullish and number of advisors who are bearish, and what is the gap. So today the bulls are 32%, bears are 33%, so the spread is only 1%. A few months back last year, the bulls were 90% or 95%, bears were 5%. So market peaked at that time. Today the spread is negative. So whenever that spread becomes negative, next 12 months the markets do very well. And that's what I'm trying to tell you, that we are very close to a bottom, and market will rebound sharply in the coming 1 or 2 months. So this is the correction which one you should use to build a portfolio. But one that portfolio should be thought from long-term perspective. I'll give you another chart, correct? I'll show you the chart, uh, the sentiment chart, correct? The sentiment chart show 2020, you saw when the COVID happened, that was the bottom. Then you see 2008, October 2008. The sentiment today is also same, correct? And then see how what happened in next, how the markets rebounded. In 2000, so the sentiment chart also is saying that we are close to bottom somewhere. Then institutional flows, we are at multi-year lows. So whenever we see multi-year lows, and then you see next 12 months or next 24 months, the Indian stock market does very well. That's chart number 3, correct? That's the chart 3. You see that. Then, if you see chart 4, India's profit cycle, correct? Even the profit cycle is at the bottom. Uh, and you will see a profit cycle which was in 2002 to 2008. See how it went up, and you don't know what happened in stock market in India in 2000 and 2008. From 2002, the Bombay Stock Index went up from 5,000, it went to 21,000, correct? Nifty was 3,000, it went to 10,000. Same thing will happen in next 2 3 years. We are at the bottom of the profit cycle, and we'll see next 2 3 years Indian corporates will come out with very good numbers. So all this, what is this indicates that this correction is a very good opportunity to build your portfolio. Correct, build your portfolio. So yes, the correction is there. It's like 5 o'clock in the morning when it's extremely dark, but at 7 it's extremely mm, sunrise is there and the fresh air is there, correct? So we at 5 o'clock in the morning, five between 4:30 or 5 when it's extremely dark, correct? Same thing, that is a period in the stock market. So how should you position yourself, correct? Do not panic. Select the best. So every time when you invest, keep on asking, is my quality of portfolio improving? In a bull market, the quality of portfolio should be good. In a bear market, it should be even better. And when a correction happens, you should buy even better stocks. Don't buy cheap stocks. Select the best. Follow a process, disciplined process. Do not invest based on rumors. Do not, oh, I got this WhatsApp message and then they forward it to us. And so, what do you think about this? Millions of WhatsApp messages. Every message is not true. It's very easy to spread fear, correct? So, uh, do not react to WhatsApp messages. Aim for long term goal, rebalance, and invest for long term. Life is long. Same way, when you we go for education or professional degrees, we go for long haul, correct? Same way, investing is for long haul, no short term. No, in short term, grass grows, long term, mangoes, correct? To have a mango tree, it takes 5 years. To get grass, it takes just 2 days, correct? Or 1 week. So short term, grass grows. If you want grass, go for short term. But if you want mangoes, you invest for long term. So this is the way you should do it, correct? A wise investor, who's a wise investor? Uh, so when we want to work with wise investors, wise clients, mature clients, correct? Not uh, we don't we prefer to work with clients who have a personality of a tortoise, not the clients who have a personality like a rabbit, who want to do shortcuts, and you can't create value there. You can't build a good portfolio. Uh, so what are the traits of a good investor? One sign of progress of an individual investor's portfolio is that they churn very less. They don't try to, oh, markets are going to go down, so I'll sell and buy again. That kind of fancy ideas, they don't get that, correct? So it's, my horoscope is bad for 7 years now. So my wife says, okay, I'm going to give you a divorce now and remarry you after 7 years. Our spouses don't do that, correct? They stick with us. Same way, we have to stick with our portfolio. Hmm? Do not try to fool yourself that you can become rich very fast in stock market. No, stock market not is a gambling den. Stock market is not a place where you can solve your life problem. Stock market is a place where you can build a Taj Mahal for your family. You can build a Taj Mahal. Taj Mahal requires a vision, it requires a process, and it requires quality, correct? Uh, You can't, and every time a new IPO comes, people come and ask, okay, you can't invest in everything. You can't want to grab every opportunity, correct? So, okay, now I'm 63 years old, but when I was 19 or 20 years old, I was doing very well and very, very famous in college. So that doesn't mean I flirt with every girl, correct? You have to be very pick and choose, correct? You can't do that, correct? You can't do that. You have to let opportunities go. You have to be very selective. You can't grab everything, correct? You can't have every kind of happiness in life. You have to choose. You have to prioritize. We have to make choices. Investing is also of making choices. Uh, Making as much money as quickly is not possible. It's to make quick money. That is not a strategy. The strategy is to have a quality portfolio. Mm. That should be a strategy. Aggressive strategy cannot be a substitute for high savings. Savings. So if you want to build a large portfolio, save more money and invest in boring stocks. Invest in a boring way of mutual fund investments are boring, correct? Stocks, direct equity is very what do you call? Stock options and derivatives are is very kicks you get. We do not take clients. We do not invest in through derivatives. We have never invested for anyone in a derivative markets. Don't go with uh, PMS products or those kind of products which are give you kick. Don't do that. Invest in boring products. Invest in boring companies, which Hindustan Lever, Tata Steel, you know, Indian hotels, or you take Honeywell, 40,000 rupees stock. It's a boring stock. Hmm? It fluctuates very 0.5% here or there every day. Whereas a speculative stock fluctuates 8-9%. No, Yes Bank, or for example, Reliance Capital. Wow, people still want to buy Reliance Capital, correct? Don't invest in those kind of penny stocks. You'll get killed. Invest in boring stocks. Invest in follow a process, correct? Yeah. So, and this is my final slide, and then I'll take questions, correct? So, if you have tried to become a tortoise, have a personality of tortoise, you will live for 150 years. Your portfolio, build a legacy portfolio, your savings, which will live for 150 years for your family. Build that kind of portfolio. Don't try to return. Don't focus on return. Banyas do that, but they make. Who's a banya? Who buys from one trader and sells to another trader? Their margin is what? 0.5%. Now, invest in companies where you get 40-50% over a period of 5 years. So a manufacturer makes big money. A banya makes less money, correct? So don't try to focus on return and like a rabbit who wastes a lot of energy who, and output is very less. So build your personality from a tortoise way. Your financial portfolio will last 150 years. Do those kind of investments. Now the standard disclosures are that correct mutual funds are um, we are mutual fund distributor, AMFI registered, and we are SEBI registered stockbrokers, correct? So, and we are not promoting any investments in today's webinar. And feel free to ask questions. And if you like today's webinar, I would like you to subscribe to our channel. Um, and this YouTube webinar, it will be on our YouTube. You can watch it, relax whenever you want, and feel free to give us feedback. Okay, and with this, I'm open for questions, and uh, yeah, go ahead and let's see what questions I have. Um, okay, the first question: should we book some profits? Okay, again, I'm saying, are you a trader or a long-term investor? Correct. So you build a Taj Mahal, and Shah Jahan sold the Taj Mahal in 6 months. What happened then? Correct. Today the Taj Mahal is there even after 400 years is making money. So if you have a good portfolio, stay invested unless you need money. Don't try to outsmart the market, please. Please don't try to check your portfolio every day and I'll sell it and buy it again at a lower price. No, that is not possible. I've never seen anyone successful consistently doing that. I'm being in this business for 40 years. I, and this is my more than 40 years. Um, and trust me, I worked with all kind of. I worked with very big people, very big clients, well-known personalities of India. But anyone who tries to outsmart the market has lost. Don't do that. Stay invested in good. If you have stocks like Hindustan Lever, if you have a stock mutual funds, uh, large cap mutual funds, you have very good technology funds, stay invested. Don't try to trade. You'll lose because transaction costs, if you book profit and want to get in again, there's a capital gain tax of 10%, correct? Unless you want to rebalance the portfolio. But that will depend on case to case, correct? Just because you feel that you are making money, I want to book profit and buy a low, don't do that. That's a very risky strategy. So it's like this. Imagine if when you think like booking profit, ask yourself, 4 days you were happy, so now fifth day is going to be a bad day. So you're going to drink alcohol and become a devdas? No, correct? And you try to make a fifth day also a happy day, correct? Look forward to that day. So it doesn't mean that you had 4 good days, so fifth day is going to be bad. Now, don't same thing doesn't work in the real invest life. Um, with so next question is with so much volatility in equity market and steady rise in bonds and interest rates, how much should be the debt as a part of portfolio? Okay, so this is a very good question. So debt portfolio, so bond. They say what is bond or fixed deposit? Bond or fixed deposit is for holding your cash, holding, stocking your cash, and equity is for growth of cash, growth of your wealth. So if you want to build your savings, equity is the asset class. If you want to hold cash, then bond is the. Now in the current when interest rates are going up, debt funds will give slightly negative returns or low returns because what happens is as interest rate goes up, bond prices come down. So I would say I would invest in a short term liquid funds or short term fixed deposit, uh, and that is what is for emergency required. And I would keep depending on my age. So if I'm 70 years old or 60 years old, I'll have 40% in bonds or fixed deposits and 60% equity. But if I'm 25 years old or 30 years old, I'll have 90% equity. So it depends on risk profile, not depends on the market situation. Uh, so it doesn't depend. So it's like, I'm scared. There's so much traffic on the road. So should I stay at home? No, then you'll be unemployed, correct? If there's so much traffic on the road, still you have to go to work, correct? So what I'm trying to say is you have to analyze the situation, and the avoiding the market is not the answer. Mm, what are the next question is what are the probabilities that the market will go up and down, stay at the same level in next 1 year? Oh, this is again a very good question. So I think I shared this in my team internally. The probability of market going to 62,000. I read in Morgan Stanley research report the probability of market going to 60,000, which is a modest return from current level, 57, 58, is 30%, uh, or 35%. The probability of market going to 75,000, Sensex going to is another 30%. So the probability of market going up is 65%. And the probability of market going down from 57,000 to 45,000 is less than 30%. So the probability of market going up from the current level is two-third, and the probability of market going down is one-third. Now, and you know, uh, in ocean water always there's always waves, correct? So stock market is like an ocean, there will be always fluctuations, and it's a very good thing. The next question is you have uh, the market has been volatile now for many days. Do you see the trend continuing, or you may see a bull run? Okay, uh, what is a bull run? Bull run. We are still in a bull run, long-term bull run. Market don't go up every day, correct? Market don't give 100% return every year. Out of 15 years, 1 year you'll get 100% return. So that kind of bull run happens once in 15 years, correct? When markets go up 100% in 1 year from 52-week low to 52-week high. Markets give steady, but if you look at over a longer period of time, we are still in a bull market and markets will give you steady return of 15%, correct? You don't have to look at the market. If inflation is 8, 9%, if you're getting 15% return, it should a good return. It's a real return, correct? But invest only long term, correct? Invest in the long term. What is the one very important risk factor for the market in the near term? The most important risk factor is how you think, not the market. It's how you think, correct? If you try to outsmart the market, it's very risky. But if you are investing from long-term perspective, there is no. The other risk, see what happens is why markets fluctuate in the short term, uh, because everyone thinks that they can outsmart. They want to sell. Today the market is oversold, so there are more bears than bulls. Correct? So there are more short position. Uh, so the only risk factor today is a catastrophe war, uh, um, getting converted into a nuclear war, which I see less than 5% probability, or less than 3. Other than that, I don't see any. I don't see a major financial institution collapsing like 2008. I don't see major frauds. Markets correct when there are very large financial frauds, like Unit 64 when it collapsed. Markets were in a bear market for 3 4 years. Correct. Herschel Mehta scam. Markets were bad for 2 3 years. Nasdaq, correct, in WorldCom, Enron, those scams. 2008 Lehman Brothers scam, correct. Markets were bare for 2 years. I don't see that kind of correction just now. Do you think IT rally is over? No, IT rally is okay. So before that, another question: how do you think gold can sustain this current rally? Okay, gold has shown a breakout, 52-week high. Gold may rally 10 to 15% in next 1 or 2 years, and um, it's okay to hold 4 to 5 if your portfolio. Okay, so here let me caution you, correct. So if you're 28 years old and 29 years old, I don't want you to buy gold. But if you're 60 years old and you have 10 crores portfolio, then you have 50 lakhs in gold, it's okay. 5% of your portfolio if you have a very large portfolio. But if you have a small portfolio of 5 lakhs or 10 lakhs, buying gold doesn't make sense. Gold makes sense for very large portfolio to hedge. So this answer is, don't look at returns. You have to see asset allocation, your risk profile, and your long-term goals. So accordingly, we have to structure the portfolio. But gold is not going to correct in the short term. Gold is going to be steady, and why it's going to be steady, correct? So imagine people in Pakistan, imagine people in Sri Lanka when the currency is depreciating 20%, or in Russia in 1 week's time. They lose faith in the currency. So what they do, uh, they buy gold. They hold in gold or they buy US dollars, correct? Or some people buy bitcoins. But when you're in crisis mode, bitcoins people don't buy, correct? Make sure people won't buy bitcoins. They'll buy gold. So, uh, so in many countries in the world today, in Africa, South America, small economies like Mauritius, all those economies where the economies are very small and they have got affected by COVID, disruption of supply chain, disruption of international travel, the gold is the best hedge. So that's why gold is going to be steady in the coming day. Uh, the next question is, in which sector needs to be invested now heavily for long term? Now, okay, you okay again I'm saying you can't, in stock market you can't invest only in one sector. You have to have a balanced approach. You can't rely only on one team player to hit century every time, correct? You need 11 players, and same way in your portfolio, you need to have 5 6 sectors, and they play in rotation. So, but the current in the current we are increasing. So last 4 5 years, in Nifty, banking stocks had 40% allocation, but at Simplicity we are investing only 10% in banking. Now we have increased the allocation to 20% or 25, so because now banking will rally, correct? So that's how we are doing. We are reducing the allocation to pharma. Hmm. Pharma has become 15% of our portfolio, so we're trying to rebalance it to bring it down to 10. But everyone needs to have 10% minimum in there. Now, again, profit booking or rebalancing, you should do it only once your portfolio is above 50 lakhs or 1 crore. If your portfolio is 5 lakhs or 10 lakhs and you try to rebalance it doesn't make sense. It doesn't make sense, correct? First, you build a large portfolio and then rebalance, then do that kind of stuff, correct? Uh, so, in which sector to invest now heavily for long term? Yeah, so I'm saying again, technology, banking, infrastructure, these are good sectors to invest. Um, uh, yeah, pharma will give a steady return. Pharma is a defensive, correct? It's a defensive play. If sudden catastrophe happens, pharma is not going to correct by 10 or 20%, but pharma will give a balance to your portfolio. See, pharma is going to be like a pillar in your building, correct? The pillars carry the weight of your house, correct? Same thing, pharma will carry the absorb the volatility. So that's why we need to have 10%. Oh, pharma is not moving, so let's get out of it. No, we need to keep investing in pharma, but not more than 10%. Yeah. Mm. Then next question is, Adani stocks are doing well. What is your view? I can see financial and businesses plan look very good and aggressive. Yeah, at the age of 18, we are very aggressive. We think we are never going to die, correct? At the age of 18. So Adani is like that, young person, and he thinks the world is at their feet. No, we are not investing in Adani stocks. It's very closely politically, and it has grown up exponentially in last few years, and we are scared about that growth, correct? You can't eat 50 gulab jambus. You need to eat 2 3 gulab jambus every day. You can digest it, correct? If somebody eats 50 gulab jambus in a day, won't you be scared? Same thing. So Adani has gone up very fast. I'm scared about it. I'll stay away. I don't chase, don't invest looking at the returns of this. Don't chase momentum. See the quality. We look at quality and do that, correct? Um, which of the most of the other group stocks nearing 50 lifts, and are we heading towards an equity bubble? Um, I don't think we are heading towards equity bubble, but I would be cautious. I'm not saying anything negative Adani Group for this. It's a politically affiliated group. We know that. I would stay away from it. That's what I would just say that, correct? Uh, what is the effect of inflation? Yeah, so inflation is going to help old economy stocks, value stocks. So inflation is going to help it steel stocks. Inflation is going to help cement stocks. Inflation is going to help banking stocks. uh, all those kind of big companies, highly largely profit making companies, huge large, because it's very difficult to build. They are the best hedge against inflation. So, mm, yeah. Does it make sense to stock up HDFC Bank? Yeah, yeah. You can. HDFC Bank is a very good buy at this current price levels, and we are adding HDFC Bank, Tata Steel, mm, Bandhan Bank, and those kind of stocks. They are very good buy at this time. Yeah. If it's only valuation or technicals that should be looked at, in your opinion. So let me ask you one thing. Do you look your spouse's horoscope daily? No, correct. You look horoscope at the time of matchmaking. I don't believe in. I never looked at that way. Also, I never cared about my spouse horoscope. Uh, so technicals are like horoscopes, correct? Charts. Um, I don't look at that. I look at the fundamentals, the management. Number one thing I look at the company is the management. I see if it's between a family owned company and a professionally owned company. I'll go with a professionally owned company. I won't go by a family owned company. Then I look at that. Has that company gone through 2 3 bad cycles? So you see Tata Groups. It is there for 150 years. It has gone through so many bad cycles. Yes, I would go with that. But if you go with Adani has not gone through bad cycles. That group has come in just last 10 years. That's why I'm staying away from it, correct? I want to see how they behave in the bad time. They'll crack. You saw Diwan Housing, what happened, correct? One bad hawa ka joka aaya, डूब गया. You saw all those kind of companies. I don't want to invest in those kind of companies. Hmm? Uh, uh, then the next question is, I won't, as I said, is the valuation or technicals. I said more is the valuation, more is the management quality, and the business quality is the number one. I go for that, correct? Business quality and management quality, and ethicality of the management. Mm. That is a huge premium. Mm. If a family-owned companies, they work for families, correct? They work for their child, their family members. They don't work for shareholders. I I go for that quality of management. Are they working for shareholders or they are working for their family members? You see, Microsoft, Google, Apple, they all hired professionals, correct? Microsoft, Bill Gates didn't put their children on their board. Do you see any Bill Gates children on the board of the Microsoft? No. Even his spouse is not there, correct? But you see in India, Birla Group, Reliance Group, Ambani Group, you see all Wadia Group, you see the family members, correct? Family members. Uh, you have you heard any? Have you seen any news what Bill Gates' children are doing, or what Google's children are doing, or what Apple's children are doing after Steve Jobs died? Do you see any of his family members? No. Amazon. You see? Do you see any family members? No. Correct. Professionals. Go for those kind of companies. Correct. And then it is always difficult to. Next question is. It is always difficult to decide when to enter in, in strong, healthy, and boring sectors like Bajaj, HUL, Bajaj Finance, Reliance. And when you are already invested and sitting on profits, is it only valuation or technicals should be looked at? So we look at valuations, we look at technicals, and we also look at the business fundamentals. Correct? Business fundamentals, the growth, what things are happening. So I'll give you an example. So we have um, and based on that we buy those stocks or we buy those sectors, correct? As I said, we are underweight banking and financial sectors for last 3 4 years, and now we are overweight, correct? We are overweighting that. We are overweight pharma in 2017, 18, 19, when it was going through very bad phase, and pharma gave 100% return in 1920, correct? We didn't know COVID was going to happen, but we knew that Indian pharma companies are going to be rebounding sharply as the world is aging. Uh, so we do that kind of a long-term thinking. So currently, if you look at this, there is a mix of things, correct? So in a good movie, you don't have only you have a good script, correct? You have a good script, and it is very professionally done. Same with portfolio, it should have a good script, correct? Your portfolio should be able to tell you a good story, correct? And it should have a balance. uh, like your food is a diet balance, correct? All in life, we don't have only sweetness or happiness every day. We have happiness, sadness, satire, all kinds of different moods are there, correct? Same way in your portfolio, you have to have a balanced approach. Uh, yeah, very good questions. Are there any more questions? Um, I'll wait for 1 minute. And if I have missed, you can always be free to contact us, talk to me, approach me or my team, and we'll be happy to assist you, correct? Uh, uh, Let me summarize, correct? Let me summarize. What I'm saying is, um, be a tortoise, don't be a rabbit. Don't try to run here and there and try to make, go steady, step by step, build a portfolio which will last 150 years like a tortoise. Rabbit lives only for 9 years. Don't do that. Then again, I'm saying India is in a very good position. India is in a very good position. Markets are at extremely, I think we are close to bottom or near bottom in next 1 or 2 weeks. We'll see. It's a very good time, correct? Don't try to do bottom fishing. Start building your portfolio, but invest only what the money you don't require for next 3 years, and build a portfolio, correct? And thank you very much for your time. uh, and I appreciate your spending valuable time and watching this video. Do subscribe to our video YouTube channel. Thank you. Have a nice day. Have a nice day and good luck. Bye. Thank you.